In our previous video, we discussed about how we can use a break of structure for us to find our entry into the market. We've established that and how we can use a candlestick pattern formation. In this lesson, we are looking at a combination of our divergence in making entry and as well as using our chart pattern. So basically, we'll be using two types of chart pattern to find entry, and this chart of pattern is going to be our M and W chart pattern, and then our bullish and bearish flag pattern. Now, M and W chart pattern is basically for a reversal trade. Okay, for instance, when we have price selling, just as we have in here, price sold down, went back, sold to the downside, and then here price moved to the upside. So when we look at this particular movement, we can say that this is our lower high. Right, this is our lower low, this is our lower high, and here is our lower low. So price came back all the way to break this lower high here, and when price break it to the upside, here becomes our break of structure. So now it is established that we are now in an uptrend. So we can pick a continuation trade in this uptrend, and one of the continuation trade that we can pick now that price is uptrend is for us to continue going in the direction of this trend, which is to buy. That is condition number one. And if we want to buy, we want to use two types of pattern to continue with this buy, and the first pattern is to use our bullish flag pattern, while the second pattern is a bearish flag pattern. These are two continuation patterns, but now we are not going to use this continuation pattern in isolation. We know we are in a structure of a buy, so the right way for us to incorporate this continuation pattern is we want to establish some zone, mark out point of interest. So this area is a resistance zone, because price retest here, and you can see price again for the second time, and this area is our support zone. Having said that, when price break out of this resistance, it break it to the upside. So for this resistance to be a valid point where price has broken, and it is established that whenever price break a resistance, that resistance becomes a support zone. And the only way we know that the resistance has become a support zone is price will retest the resistance, validate it, and then it will continue to the upside, which will now make it a support zone. So trading from this retest now to the upside is what we are now calling a continuation trade in the direction of that particular trend. So for this continuation trade, we will be using a pattern. And what pattern are we saying now? To buy is going to be a bullish flag pattern. So in this scenario, how does a flag look like? In a normal term, you realize that price will go like this, and then it will come down, continue up, and then come down, and then continue up. So marking this zone, you can see that this movement to here is looking exactly like a flag. So this is exactly what we are having here. So now that price is retesting this zone, we'll move to our 15-minute time frame. Now you can see how obvious this movement is. Very obvious on 15-minute time frame. The price has pushed. Can you see now when I join this, you can see that this is looking exactly like a flag. So in this continuation pattern, what do we want to see? We want to see price break out of this flag to the upside, and then we'll make our buy entry and our stop loss is below the flag. So this is how simple, and this flag now becomes a breakout of that resistance, retest it, and is now continuing to the upside. So this is a bullish flag pattern using for a continuation trade. And when this was happening, look at our condition on our CCI is for this continuation price condition pattern is either CCI has pulled back to our level of 20 and 10 and it has crossed it, is going to the upside, or it should be that it has crossed the level of 50, because a retracement can either be partial, which is 50%, or in full. So in this case it has crossed 50, so this is a valid entry for us in order for us to place our buy trade. So what do? I will execute my buy order, and this is my stop loss. And I have my take profit rightly positioned. So this is the right way to make a continuation trade using a particular chart pattern, either a bullish or a bearish. Then the second method of making this entry, we said for a reversal now, we want to just deny a continuation, but for a reversal we will want to see an M or a W chart pattern. And there are various types of this M and W chart pattern. We have a perfect M, which will form obviously like this. We have another M, which the first leg will be long and then the second leg will be shorter. Then we have the other M, which the first leg will be short and then the second leg will be longer. So these are the major type of M that we have in a price scenario. Now it is important for you to note that anywhere you have this particular M with the second leg, the first leg is short and the second leg is longer, is what usually gives us a divergence. So in that scenario, if you look at your indicator window, something like this, you will now notice that in that M chart pattern, you will notice that the divergence will now give you, the first leg of the divergence will be long, while the second leg of the divergence will be shorter, which is contrary to what the main chart price action is giving you. Then the W chart pattern, we usually have a perfect W like this. We have another W which the first leg is short, the second leg is longer, just as this one. And then we have a W which the first leg is long and the second leg is shorter. Then in this scenario, this is the one that gives us a divergence. The first leg will be short while the second leg will be longer on the price chart. But when you come to our indicator window, you will notice that you are having a first leg will be longer and then the second leg will be shorter as a divergence. Or you will notice that the first leg is long and the second leg will be equal to the first leg on your indicator window. So now let's look at this particular scenario. This is our support zone. So when price was coming from here, price have retested here initially. So when this price came all the way down, you were expected to get a buy signal and go to the upside, right? But price rejected and then price came and take away this low. So when price take away this low, something contrary to the original plan has happened. All you need to do is for you to pay attention to your indicator window, because if this is a low and this price is taking this low, because now this particular low has already closed below this one, right? So if that low have closed below this particular one here, as it is now, it means that price is going to the downside. It means we want to have a lower low this way. But when you pay attention to your indicator window, you will notice that you are having something like this, but the shape you are having here is a divergence. So which now signal that you are about to have a divergence, which is a reversal signal. And the only way you can curtail this is for you to watch out for how price will behave. Price will now do what? Price push to the upside. It return. So now this is the first movement of price to the downside. It pushed up and then it came down for the second time and then went to the upside. So now this is a W sharp pattern playing out on a 1 hour time frame. And look at this indicator window. You will now realize that your commodity channel index is giving you an equal low. So this is a divergence. But if you want to make this entry on a 15-minute time frame, look at this. Very obvious. So this W sharp pattern plays out and this flag pattern plays out on a lower time frame. You can see what happened here now. This is a W sharp pattern. Can you see that? See how perfectly it's placed out. And this is a divergence. And this divergence is obviously clear on 15-minute time frame. So even when price break out of this support, you did not expect the leg that was from here. You look at your indicator window. Here was supposed to, the indicator too is supposed to break this low, but it did not. So that signals a reversal. And as such, this is our W sharp pattern. So you now have your valid entry at this zone. So you'll now be wondering, how do you make your entry? Obviously, you will have your trend line connected. If you were trading this before, when price came down, your trend line is obviously connected this way. This is your trend line connect, and then price break out of this, it retest this zone. You can see that, and it continue to the upside. So this is how perfect you can trade the M and W chart pattern. So this is for a buy scenario. Okay, and look at this. For this sell, this is the zone we have marked out earlier. Okay, for this sell to happen, you can see that we have this pattern playing out. And when this was happening, you will notice the movement of your, you see that? And look at your commodity channel index. So this is how it works. I've taken so much time, and this, the essence of this is to explain in detail for us how it works. You can see this flag pattern playing out, this W pattern playing out, all of this, and then look at this as well before this sell, and this divergence is obvious at this point. So please go back, watch this video again. And lest I forget, thank you to all our new subscribers. Very much grateful to have you. I celebrate you. Thank you for the massive love and support. God bless you. Please do not forget to give this video a like, share, subscribe, turn on the notification bell so you'll be the first to get notified when we upload our next video.